So, quick question. What do you do when you realize the game you've been playing might be rigged? If you're an American, you keep playing and blame fate. But if you're China, apparently you flip the table, take your chips, and go build a new casino next door. Because that's basically what just happened. On June 24th, one of China's biggest banks, the ICBC, very quietly announced they're shutting off retail gold trading. Not gold, trading gold. And they're not the only one. 4 of their major banks did this in the span of a few weeks. Same date, too, July 24th. That's not a coincidence. It's a strategy, a plan. But for what? Now, officially, the story's all rainbows and sunshine, and it's the reason banks like ICBC are giving in their own announcements. Like, we're protecting citizens from volatility. Now, remember, gold spiked to insane highs back in January, then dropped nearly 30%. So, for your safety, they jacked up the collateral requirement to 140%, a record high for the industry. In simpler terms, you now need more money than the gold is worth just to bet on it. That's not a safety rail, that's a please stop playing sign. Cute story, but nobody but your great-grandma's buying it.
Here's the theory that actually explains what's happening. China isn't banning gold. They're banning the paper version of gold. Quick explainer, because Wall Street loves making simple things sound complicated. Say you've got one real, actual 24-karat Labubu. One, sitting in a case. Now imagine you print 10 little receipts that say, this gives ownership to the 24-karat Labubu, and you sell all 10 to different people. Nobody's rushing in to actually collect the real one. They're happy just holding the receipt. So on paper, it looks like there are 10 Labubus floating around. In reality, there's just one. That's paper gold. In markets like London and New York, most gold traded every single day isn't real metal moving hands. It's just contracts, pinky promises, IOUs stacked on top of IOUs. Nobody knows exactly how much paper gold exists versus real gold, but logically, we can agree on one thing. There's way more paper receipt than actual metal, which means the real price of gold might be dramatically higher than the number flashing on your screen.
So how would we actually know if the game's rigged? 2 signs. First, the physical and paper prices should start to disagree. And they have. Commodities coverage earlier this year flagged physical silver briefly trading at close to a 40% premium over paper silver. That's the market whispering, I don't trust the ticket. Give me the real thing. Secondly, watch what the smartest players on Earth actually do, not what they say. And the smartest players, central banks, have been buying physical gold at the fastest pace ever recorded, according to World Gold Council data. Over 200 tons a quarter for 10 of the last 11 quarters. And here's the wild part, even that number is probably too low. The World Gold Council itself says its total includes an estimate for buying that never got reported anywhere. So gold nations are quietly adding to their piles and not officially telling anyone how much. Cool, very normal, very transparent behavior from world governments, as always.
Now, China can't get the world to hold the yuan freely. It's a controlled currency. Nobody fully trusts it yet. But if you tie the yuan to something everybody already trusts, like gold sitting in a real vault, suddenly the yuan gets an anchor it never had. That's why China's building this system across Shanghai and Hong Kong together. Shanghai sets a price backed by real physical metal. Hong Kong lets the rest of the world actually trade on it. But the US isn't just sitting there either. There's a real, semi-serious idea to revalue America's own gold reserves, which are still priced on the books based on a law made in 1973, where an ounce is equivalent to $42, instead of today's roughly $4,000, unlocking almost $1 trillion in hidden value overnight. Basically, China's playing the gold card to prop up its currency, and the US might just play the same card right back. And China's not just hoarding gold. They're building their own gold pricing system. So instead of London or New York deciding what gold is worth, Shanghai does. Back in 2014, at an LBMA bullion market forum in Singapore, the Shanghai Gold Exchange's chairman basically told the West, straight to their face, that once China had a real seat at the table, the true price of gold would finally come to light. That was 12 years ago. That prophecy's looking a little too accurate right now. So, no, this isn't really about protecting retail investors from volatility. It's about a slow-motion divorce from the paper dollar system, and gold quietly becoming the world's trust fund again. Is it definitely a global conspiracy? Maybe. Is it suspicious that every central bank on Earth started buying secret gold at the same time everyone stopped trusting US debt? I mean, yeah. Thanks for watching. See you in the next one.